In front of me. Okay, good. Welcome, everyone. I'm Fred Kempe. I'm President and CEO of the Atlantic Council, where we're in partnership with Abu Dhabi Sustainability Week for the 5th year running, doing our own Atlantic Council Global Energy Forum, looking at the geopolitics of the energy transition. We're delighted to be in this partnership with ADSW. And even though we can't travel right now to Abu Dhabi, it's fantastic to hold these conversations virtually. For the next 20 minutes, we're going to turn to a discussion on environmental, social, and governance investing, better known now as ESG, and the role of investors in the energy transition. And we're going to be talking to two of the most thoughtful and important individuals in international business and finance. His Excellency Khaldoon Khalifa Al-Mubarak, the Managing Director and Group Executive Officer of Mubadala Investment Company, and Larry Fink, the Chairman and Chief Executive Officer of BlackRock, the largest money manager in the world. Last count, Larry, that I saw was 7.4 billion under management. Trillion, right? Isn't that Larry? I believe. In any case, given our short time for this rich discussion, I'm going to jump right into my first question. And Cal, I'm going to resist the temptation to ask you in this session about Manchester City Football Club, my favorite. But I do want to give condolences for the loss of one of soccer's greats, Colin Bell, just a few days ago. So first question, I'd like to ask you first, starting with Khaldoon and then to Larry, about how Mubadala and BlackRock think about ESG in their portfolio. In particular, there is some skepticism in media particularly about the scoring of ESG metrics and to what extent it's a move to look good and to what extent there are true investment ramifications. I'd like to have both of you talk about ESG metrics from that perspective.
If you allow me, Fred, I'm going to ask Larry to start because he set the tone. He set the tone for all of us when it comes to ESG. And politely, I will ask him to start.
Let me start. Thanks, Khaldoon and Fred. Welcome, everybody. It's a great honor to be part of this forum. As I wrote in my 2020 CEO letter, I talked about a tectonic shift in how we are thinking about investing and how are we thinking about how the world is transforming itself. The pandemic of 2020 has only accelerated this tectonic shift. It is through data and analytics that we're going to be able to better assess how every company is moving forward to a net carbon zero future, to a Paris Accord future. But it is through the data and analytics that we are going to properly analyze the performance of every organization in the world. And the shift is occurring as more and more investors believe that climate risk is investment risk. And in 2020, we saw a huge acceleration in interest by investors. I believe in 2021, that acceleration is going to occur even more rapidly as we have more and more companies report under SASB and TCFD. So it is all about data. It is all about data and then using that data to have the analytics to have better understanding. But let's be clear, this is just the beginning of really of a 30-year trend. And that trend is going to be significant. In the interim, though, we're going to be heavily dependent on hydrocarbons as we do move towards a world of more sustainability. And so we're going to be judging the curve of the need of hydrocarbons with the need of transformation. And through data and analytics, we are going to actually accelerate this transformation.
Thank you, Larry. Just really quick question. How do you deal with this criticism that where we are right now, there's this tension between looking good and actual investment ramifications?
Well, most of it's just unfounded. It's just a view. They may look at what BlackRock owns, and because we are the largest index provider, and none of this is our money, with all our $8.7 trillion that we're responsible for, other people determine where that money should be going and what strategy. But through data and analytics, we're transforming the clients. And as I said, in 2021, we are going to see even a re-acceleration of movement away from traditional indexes into customized indexes that may have better ESG scoring. But this is occurring, it's transforming. And I will be bold enough to say I think we at BlackRock are doing as much as any company in the world are doing this in the identification, the movement, and the data analytics. I think some of the voices that are speaking loudly, though, they don't want to know the facts. They just want, which is shocking. They actually just want to have a voice. But I applaud the voices, though, Fred, because the voices do push us and push clients forward faster. So we're not against everyone having a voice, but the actions, the realities are a big significant change.
Thank you, Larry. And let me turn to you, Khaldoon. You did say that Larry was a trendsetter, but Mubadala has moved a distance as well. Talk about ESG investing from your perspective and how you value or score the metrics.
Well, first of all, I want to thank you, Fred, and obviously thank Larry for the opportunity to be with you guys today. No doubt, I want to reiterate, ESG is here. Larry, and his letter, I will never forget his letter. I think all of us in the industry have been thinking about this for a while now. Larry took a very important step, and I think that letter and that movement, that snowball that started afterward, that positive snowball. I think for all of us, we have to, and this is why I need to recognize Larry for the role he's playing in this. Now, the train has left, so I think that road when it comes to ESG, we are on that track, and everybody's going in that track, and there's no denying that, in my opinion. And institutions around the world have to build a strategy. There's just no question about that. Have to build their own strategy, have to have, as Larry said, the data analytics correctly defined, and really know where they're going in the direction of ESG. We as Mubadala have been thinking about this for a couple of years now, and really we used 2020, the end of 19 and really the year of 2020 to define our future, to define our strategy, to set a clear parameters in terms of how we're going to invest and where ESG is going to lie within our investment strategy, and how we're going to essentially direct our investment teams in terms of how they operate, who they operate with, what they invest in, and the processes internally that we're going to be essentially evaluating them against. That's done, and I think we as Mubadala, we know exactly how we're going to look at this. And it, by the way, echoes a direction that we as a country, the UAE, have been going towards for many years, and that's an important point to really place here. As a country that is traditionally a hydrocarbon producing nation, where oil and gas represents a significant component of both our economy and our GDP. I think the UAE has done an incredible job over the last 20, 30 years in the evolution of its energy strategy by investing in the future, by investing in renewables, by investing in solar, by investing in nuclear, and various forms of energy generation and transmission technologies. Today, we're looking aggressively into hydrogen. And we in Mubadala are dead bang into all of this. We've been leaders in the investments on the renewable energy front, both in the UAE, in the region, and globally. This has been an area that for the last 10, 15 years we've been investing in. And through industry. Also, I'm one of the greatest things I'm very proud of. Just a couple of days ago, we announced in one of our industrial champions, Emirates Global Aluminum, one of the largest aluminum producers in the world, the plans to produce for the first time aluminum using solar energy. And that's a massive move for us. And it just echoes what I'm trying to say in terms of us trying to play a key innovative role in this transition.
Thank you, Khaldoon. Larry, back to you. How did the pandemic change the ESG picture? So looking back at 2020, but then looking forward to 2021, you have a administration coming in the United States tomorrow, the inauguration, where climate's going to be a bigger theme. Is that going to push things forward? So how did it change, pandemic, how did it change things in 2020? And then what do you see as the major forces 2021? First to you, Larry, and then to Khaldoon on the same question.
So the pandemic was an existential risk to humans' health. Climate change is an existential risk to the planet's health and all humanity. In addition, every company needs to be focused during the pandemic of how to making sure that your employee base is safe not just physically from the pandemic, but safe on a mental health basis, as we all are witnessing tremendous changes, positive and very negative, to everyone's life. The death rates in the world, we all know people who lost some loved one. Just today, I learned of a BlackRock employee's stepmother passing this last night from the crisis. So we're experiencing all these major events, and all of this is only accelerating the concept of ESG. So the social issues, how you're dealing with your employees. Obviously, in the United States, at the same time we had the pandemic, we had a racial injustice in America. In America, we had obviously an assault on democracy just 10 days ago. And so I believe all of this only accelerates all of ESG investing. And I would say the biggest change that we are seeing, the dialogues we're having with public pension funds in the United States, with sovereign wealth funds in the world, with big pools of assets in Asia, from Japan and even in China now, the concept of ESG, the concept of sustainable investing is only becoming more heightened, and it's only going to be accelerating.
Thank you for that, Larry. And Khaldoon, let me turn to you. And also for our viewers, the Wall Street Journal had a wonderful profile of you of Mubadala, and you had incredible investment outcomes for this past year. So you obviously saw opportunities in this terrible period of time, but also how did ESG change the picture for you, and how are you looking at 2021?
Unquestionably, ESG was accelerated as a result of this pandemic. That's unquestionable as far as I'm concerned. It is. I mean, just look at the conversation we're having here today. Fred's in Washington, Larry's in New York, I'm in Abu Dhabi. We have hundreds of people joining us from all over the place. Had this been 2020, we would have been all together here in Abu Dhabi. All of us would have been, many of you would have, got on a plane and flown here. And the reality is, technology, and look at the platform we're using here right now, has exploded in its use on multiple fronts. And today we've seen, just over the last 12 months, through the use of technology, the efficiency that comes with that. So ESG as a concept is no longer something we aspire to. It's almost a necessity right now, given the way we live, given the way we operate, given the way we work, and given the way technology has helped enable all of that to function almost seamlessly. Today, we are able to function seamlessly because of these advancements. So accordingly, if anything, this pandemic has just supercharged that move towards more responsible investing, towards a clear ESG and technology-driven strategy. And just going back to your question, that's what we've done really as Mubadala this year. We didn't, this past year, we didn't just sit and watch things go by us. We took a view of what we see is going to be the future, the sectors that have the tailwinds behind them, and the sectors that have the headwinds ahead of them. And we decided very clearly to continue on a strategy that we started back in 2018 of moving away from these headwind sectors and deep into these tailwind sectors. And after a small pause in let's say March, April of 2020, we reaffirmed our thesis and went back to work. And in 2020, in terms of net investment, I think was the most active year in the history of Mubadala. 5-6 years from now, we're going to look back at 2020 as a vintage year, and I feel strongly about the decisions we took this year and the outcomes that are gonna show for us in 6-7 years from now, and all of them fall within an ESG strategy.
Thank you for that, Khaldoon. So Larry, as Khaldoon said, you have set the standards in the beginning for all this. You talked about a coming tectonic shift. Elsewhere, you've talked about a significant reallocation of capital, a fundamental change in finance. Can you drill down on that a little bit? Where do you see the significant reallocation of capital? From what to what, and over what period of time, with what specific areas would you be looking at?
Let me just start off and say I'm proud to say that Khaldoon is an investor in BlackRock. Right now the stock's around 740, and he purchased shares at 420. So looks like a pretty good investment too. But more importantly on where we're going. I think the great movement is going to be away from traditional indexes, traditional liabilities. Through data and analytics, we're able to assess every company's performance on an ESG, on a sustainable lens. Through the reporting of SASB, through the reporting of TCFD, we will be able to better understand how a company is moving forward. And through that assessment, we're gonna see more customization and personalization. That's, Khaldoon talked about technology, how it's changing, how we don't have to travel, we could have these types of sessions virtually. But also now through data and analytics, we're going to be able to personalize all portfolios and customize portfolios through data, through analytics, and we have not had that ability up until now. Through that process, through that reporting, we are going to see broad scale movement away from companies that are not moving forward fast enough to companies that are performing. In 2020, we saw probably the widest range in every industry between the best companies and the poorest companies in each industry in terms of PE ratios. There's more visibility in terms of how each company is performing, and companies are being rewarded who are more focused on ESG, on sustainability than other companies, and the other companies are being harmed very rapidly in terms of relative stock performance. That is only going to accelerate through this transparency, through the customization, through the personalization of investments. And this is where it's moving, and it's moving very rapidly. And I would just ask every CEO and their board to be focused on this, how their company is performing, because they're going to be judged much greater through this definition of better transparency.
Larry, I hope that was a sneak peek into your next letter, but let me turn to Khaldoon. As you weigh ESG investments and policies, partly the world is pushing in this direction, technology is pushing in this direction, but how important are policy drivers, climate targets, carbon taxes? And so, Khaldoon, how do you look at these? Does this drive you, or is it other things that drive you? And I think, Larry, it'd be interesting to hear from you on this as well. First to you, Khaldoon.
Well, first of all, I wish I had, that Back to the Future car where I can just get into it right now. Go back 6 months when I got that call from Larry, and tripled the allocation to that BlackRock investment, or maybe quadrupled. So I don't know if Larry, you can give me that. Listen, I think at the end of the day, we have to have, investors have to have the proper incentives, both financial, but also from their investors, to do the right thing and to invest in the right direction. So I think, we can go through all kinds of governance and expectations from the market, etc. But at the end of the day, it boils down to: are you going to achieve a rate of return that is acceptable? And are your investors or your stakeholders, or in my case, my single shareholder, satisfied in that balance that we're achieving between returns and between the responsibility of how we're going to invest, where we're going to invest, and in what capacity? I think that balance is what's going to drive you ultimately. Credits, non-credits, incentives, subsidies, leave that aside. It boils down to these two things: expectation and return, and the ability to balance that.
And Larry?
Look, we're going to have many changes. I'm, without getting into more detail about my next letter, I think
I was kind of hoping you were going to tell us what's in it on this call.
We'll be out shortly. The world is moving very rapidly, and I agree with Khaldoon. We need to have the data analytics. We need all that because it's all about maximization of return. We have to live under that mandate in the United States. So we cannot just invest in these type of matters because we believe it, and we have to prove that they are right. And the way Khaldoon accurately described it, it is about expectations, but it's also based on data and analytics. And I think through that process, that's what will create the tectonic shift.
Thank you for that. So just to get going toward the close here, where are you seeing investors? So Larry, you've been out in front of investors, and Mubadala as well. And by the way, I wish both of you had given me shares in what you do a couple of years ago, but we won't go there. But there's still a tension. Is there still a tension between investors who want social outcomes, investors who want financial returns? Is that becoming a false dichotomy? As you said, Larry, there's going to be personalization. So are you just going to live with this for a long period of time? Are you seeing attitudes of investors changing?
If you believe that climate risk and all ESG matters are investment risk, there's no conflict.
And so you less and less have to manage expectations.
Yeah.
I concur. I concur completely.
Well, that's terrific. This is terrific insight from two of the people I respect most in the world in this in this whole globe of international finance and business. You're seeing the incredible change. One of the people who really drove the change, Larry, and then Khaldoon, and the amazing performance that they've had and the amazing changes in the UAE in this direction. So thank you so much, gentlemen, for this conversation, and we look forward to hearing from you more and more on these subjects and others in the future.
Thanks, everyone.
Thank you, Fred.